All right, hello and welcome to Camel Finance. I'm your boy Camel, and this is your weekend deep dive TA video. Today, I'm going to be discussing whether or not we need to be moving to a plan B, or at least I do. So, if you're new here, you will not have seen this before. If you've been here before, then you'll be more than familiar with this melt up chart. So, in terms of the stock market, the hypothesis was that we were not going to do a 2008 fractal, which is what everyone was posting back here. And I said that we were likely going to bottom and break out and run the all-time high. And moving forward around 12 months from the lows, and you can see that we're very, very close to the all-time high. So this still seems to be well on the table. This week, we've got CPI coming out on Wednesday and PPI on Thursday. So assuming we can actually get continued downside in the CPI metrics, assuming we can still continue to tame inflation, then I think that will provide the fuel for this final portion where we run the all-time highs, and then it's time to start playing defensive. That's been the plan all the way back since the lows back here. And as you can see, this is pretty much on pace, isn't it? This isn't too far from reality. Are we also going to get a pause? If we hop into the CME right here, you can see there's currently a 92% that we're going to see a pause at the 20th of September's meeting. So again, all of this is kind of well within the expectation. In fact, this has been one of the best calls of my career. This has gone pretty much according to plan the entire way. And if we can just get that pause, and remember, usually when we see a lopsided CME probabilities like this, 92% is very, very one-sided. These are very, very seldom wrong when they are this skewed. So this tells me that we probably are going to see a pause. And if we're going to see a pause, then that should set up the final portion of this melt-up rally. Now, it also is worth pointing out that if we're going to see a pause, which is currently priced in, the chart and this current CME probability is telling me that we are going to see a lower CPI print. Trueflation has had us down on a 2 handle for CPI ever since the prior readout at 3.2. So whilst the Fed is currently playing this on hard mode, it's going to be really difficult to see significant declines in CPI. I do think it's possible that we could see something sub 3.2%. And again, if we do, that will pretty much confirm that we are indeed going to see a pause, and all of this lines up very, very nicely with seeing the all-time high run in the stock market. So in terms of the stock market, we can say happy days for now, assuming of course we do get lower CPI prints and the pause for the rest of this month. Something else that gives me a lot of confidence here was the same thing that gave me the confidence at the lows. Like I said, when we were at the lows, we had every man and his dog screaming for a 2008 style plunge. And I said, this is way, way, way too bearish. The sentiment out there is way, way, way too one-sided. When everyone is expecting a crash, if we'd have indeed put in this 50% decline from these lows like everyone was calling for, it would have been the first time in history where the majority of retail got rich from the crash, right? And that's just not how markets work. And similarly, now we're up in this neighborhood, there is an extraordinary amount of bearishness out there, and sentiment is very, very, very soured. So just how I had confidence down at the lows that we weren't going to see continued and excessive bearishness because the market was so one-sided, I'm starting to get that very, very similar vibe up in this neighborhood where it stands. The market seems to want too much downside, and I just don't think we're going to get it. Now, of course, CPI could upset us, but like I say, often on this channel, show me the chart and I'll tell you the news. And the chart says that we're not that far from all-time highs. It seems perfectly reasonable to me that we could run the all-time highs. Like I said, couple that with the CME and the Trueflation metrics, and I see no reason why we couldn't see a lower CPI print, and therefore that set up the pause in the 20th meeting, and of course the market run the all-time highs. So in terms of the stock market, I would say happy days so far. Around the same time as I was calling for this melt up in the stock market, I was also posting this and saying, look, I think Bitcoin is probably going to do Bitcoin things, and the whole working hypothesis for Bitcoin has been that it will print an all-time high, or at least a top. Even if that top is lower down than the prior all-time high, it will probably top out before the halving. And as such, it will cause everyone that is playing a standard 4-year cycle, everyone just keeps looking left and saying, yep, 3 years up, 1 year down, 3 years up, 1 year down. But I was saying, how do you harm the most amount of market participants? Well, you blow this thing off, and then we enter a 3-year bear market decline. That, in my opinion, would cause the most amount of pain. It would catch the most amount of people wrong-footed. And if they were to blow this off first, of course, they could use the ETF as a distribution tool and a price suppression tool, rather than allow an ETF to be launched here and us just go straight to $1 million a coin. I don't think that's what they want. I don't think they want to make it that easy for retail to get rich from Bitcoin. However, unlike the stock market, which has gone perfectly according to plan this entire time, this Bitcoin thesis of mine is being tested severely. So we're going to come back to this. First of all, I want to show you a few bits of news. On the 3rd of September, the number of Bitcoin holders reached 48.5 million, which exceeds the number of inhabitants of Spain. So you can see the orange graph right here, up and to the right. There are more and more addresses with a non-zero balance entering this space. The Bitcoin protocol is being adopted by the day. There are some subtle hints, such as the on-balance volume down the bottom, which you can see every single time we had a decline and a trend line break. That coincided with a major upside pump for the price of Bitcoin here again. And right now, we are not too far away from potentially breaking out. Now, if we can do that, it tells us to be open to seeing an explosive upside rally out of the price of Bitcoin. I want to also pause here and point out, how many people do you think would be caught off by this type of move? Okay, if we did this for Bitcoin, how many people do you think are expecting that right now? Because I think almost nobody is. In fact, I haven't seen so many 12K or 10K or 9K Bitcoin calls on Twitter since this neighborhood here. And again, it speaks to what I was just saying about this melt up chart. In this neighborhood, everyone was posting 2008 fractals. Everyone was calling for a 50% decline in the S&P 500 and the broader US equity markets. And we didn't get that. Instead, this low in October barely undercut the low from the summer. And of course, the market went on to not only find a bottom, but then to run all the way to within a few percentage points of all-time highs as of today. And so this current setup reminds me a lot of that. When we were down here, every man and his dog was saying, no, I'll wait for 10K, I'll wait for 12K, and then I'll buy. And of course, 15.6 was the low. And very, very soon after, we were trading at around 30K. This was just a matter of months, remember, 3 or 4 months to go 100% off the lows for Bitcoin. So right where we are at the moment, it feels very bearish. Like I said, I'm seeing a lot of 10 and 12K calls, but under the hood, I do think the path of most pain from here is probably higher. Of course, we could see the market roll over and prove me wrong. And if that's the case, as I've been saying over and over again, I become bearish on a 25K breakdown. But all the while we're above that, the chart is still healthy. It's still in a bullish structure. And I do still think that this is the path for most pain. We also have the equity put to call ratio close at 0.98. So every single time that this metric gets to 0.97, the S&P 500 bottomed on the same day or within 2 days at the most. Again, it tells us that the stock market is probably already found its low and has begun its new weekly cycle, which if I go to my cycles chart, the one I trade from, you can see the blue arrows are the weekly cycle lows. We have a new weekly cycle ahead of us. It tells us to be open to seeing higher prices. It also tells us to be open, given we have a daily cycle ahead of us, to seeing higher prices into that next daily cycle low before continued upside. Of course, after we find this next daily cycle low, the all-time high is a mere couple of percentage points away. And all of that, of course, feeds into this all-time high narrative of mine from the melt-up chart. So this is just another metric that is also telling us that if we look at the charts, we can see the news, and the charts, including the put to call ratio, are all pointing at seeing a lower CPI print on Wednesday. And of course, that will set up the pause, as I said, which will set up the run to all-time highs. So the big question for me is not necessarily will we see the stock market run the all-time highs. I think that is most probably what's going to happen. The big question for me is, does Bitcoin get a surprise rally out of a lower CPI print? And is it also possible that we see that lower CPI print that not only sets this up, but also sets up a dollar decline? Is a lower CPI print the catalyst to see a dollar breakdown and finally that move down to the 95 region? All of the charts are kind of pointing at the same thing. They're all kind of hinting that the path of most pain is a higher Bitcoin price followed by a dollar rollover. And of course, all of this will be catalyzed by the CPI and the rate pause. So again, the stars are aligning here quite nicely. And at the same time, keeping on with this theme of sentiment, look at these charts, okay, from the United Nations. Negative news is at an all-time high globally. Again, it speaks to sentiment being very, very skewed, one-sided. It was also at an all-time high, remember, when we were in this neighborhood and in this neighborhood with everyone expecting another 50% decline, which of course never showed up. We also have political extremism on the rise globally, and their Human Development Index has declined for 2 years in a row now. So being an optimist in today's world is a massively contrarian stance. And remember, as I keep saying, but it is really important, me being so contrarian in this neighborhood was what enabled me to say we're going to new all-time highs when every man and his dog was calling for a 50% 2008 style meltdown. And lastly, before we hop into some charts, look, here's sentiment again. We have the second largest weekly drop in net sentiment for the bull bear spread. Okay, so whilst the chart continues to make higher highs and higher lows for the S&P out of, like I showed you a minute ago, that daily and weekly cycle low, we have the second largest weekly drop in sentiment that we have seen this year. So people do not believe the rally. People think that what has to happen from here is this. And whenever we get one-sided market expectations, Camel likes to take the other side. Remember, all of this at the same time as everyone is starting to call for 12K Bitcoin again. And all of this, remember, whilst people are looking at the Bitcoin chart and assuming that this thing is completely off the table, that instead we're going to do what we always do, which is some kind of retest of the lows, grind sideways into the halving, and then we can start a parabolic rally. Now, this is certainly a possibility, but I want to ask you, do you think the majority of market participants are watching the red squiggle or the yellow? How many people do you think would be upset by the yellow versus how many people will be upset by the red? So with all that said, are we going to see the dollar breakdown this week? Are we going to see the CPI come in colder than expected and therefore catalyze a breakdown of the dollar as we start to run towards that 95 target that I've had since the top? Of course, any kind of dollar weakness will set up that final blow off top portion of the melt up in the stock markets and will likely catalyze a big Bitcoin pump. Certainly one that no one is going to be expecting. So here's the stock market, as I've already kind of covered, right? We've left behind a weekly cycle low and a daily cycle low. We keep making higher highs and higher lows. So as long as we're above this blue support line, I still think it's reasonable to expect higher prices before that next cycle low is due around the end of October. There's really not much more to say apart from long and strong continue to push unless we start to lose this upward sloping blue support line. The exact same analysis applies to the NASDAQ, doesn't it? So as long as we are above this yellow upward sloping support line, as long as we keep making higher lows and higher highs, then I see no reason to exit this position, and I will continue to push my long on the NASDAQ. Here's the Dow. So we still have not broken out of the Dow, as you can see. We're still working on flipping this big area of overhead resistance in blue into support, but so far we haven't broken down. And I do think that particularly if we can get that lower CPI print, we may well see breakout retest resumption this week. Of course, if we do, that will be a long from me, and the measured move continues to sit at around 38K for the Dow, which by the way would be a comfortable new all-time high. Of course, you'd expect if the market is going to continue to be bullish, Apple to possibly break out, and therefore we could be looking for something like this out of Apple. That will be a long for me if we can get there. And Tesla, I still continue to play patient for Tesla as I want to see the top of this purple downward sloping resistance line break out before I can entertain any kind of longs there. But that is something I'm watching very closely. It's been a little while since I've looked at gold and silver. I've been waiting to see a breakout. It hasn't really occurred here. For silver, as you can see, we're still chopping around, but for me, the big focal point is this downward sloping red resistance line that goes all the way back to the prior all-time high at $50. So if we can break out of that, that is a macro trend change, and we will be targeting $30 very quickly thereafter, and then significantly beyond. Is it time to do this or not yet? That remains to be seen. For now, I'm still pushing this position until it either gets stopped or we break out at the top, and then we'll add. Something else worth watching for is we clearly have an uptrend in the 10-year yield, but if CPI is going to come in lower, if that sets up the pause like I've been talking about, would we not expect to see the 10-year yield start to roll over and break down? Of course, if it can do that, that is going to take massive pressure off of risk assets. So we could certainly see this pop out. But if this thing can roll over again, in line with the Dixie rolling over, it certainly sets up that massive, massive risk on moment towards the end of the year. It's been a while since I covered TLT, but as you can see, we had this big range denoted by the yellow horizontal lines. I was saying this green arrow here would be a recession trade trigger. If TLT was to break out at the top and go, we would indeed be in a recessionary environment. But since then, notice how we've done the complete opposite. Okay, this breakdown does not speak to a recession moment. It does not speak to a massive risk off moment in the markets at this moment in time. And therefore, I think it's reasonable to expect more risk on moments for the stock market and of course for Bitcoin. So speaking of Bitcoin, here's Bitcoin, right? It's still wholly speaking, not doing much, isn't it? It's still in this silly range. It's still kind of wearing everyone down. It's still forcing people to say, well, we have to go to 12K next. And maybe we will. But like I said, how many people do you think will be sat there waiting to pay 12K Bitcoin versus how many people do you think will be left behind if this is what happens for Bitcoin? So nobody knows, right? But like I said, show me the charts and I'll tell you the news. All the charts point to this whole lower CPI, this big risk on moment, a pause which is coming at the 20th, and therefore I don't see any reason why we couldn't get surprise bullish out of Bitcoin. Of course, as I've been saying over and over again, lose this 25K range breakout and I have to flip bearish. But all the while we're above it, or particularly all the while we haven't taken out the cycle low or the prior cycle low, then the thing is just bullish, even though it doesn't look or feel like it. Remember, the more people are championing 12K, the more bullish Camel gets. Crypto-related equities still continuing to move this way, aren't they? And usually this is a biomarker for a Bitcoin pump. So all the while we continue to see more upside out of Coinbase and MicroStrategy, Riot, and Marathon, like we are seeing right now. Look, this doesn't look super bearish to me. This looks like it's made one repair, and MicroStrategy now working on potentially making a second repair. If it can do that, again, usually this is a biomarker for a Bitcoin pump loading. Here's Riot still kind of moving this way, isn't it? Still above this upward sloping blue support line, still above the horizontal range breakout, and still confirming a repair of this downward sloping pink resistance line. So far, again, it speaks to a potential pump loading, break down from all of these levels, and of course that will invalidate what I'm saying. And here's Marathon. So again, still kind of moving this way, not far off from making a decision whether that is break up or break down. We'll find out soon, but all the while we're not stopped out. The trade is valid. And again, this kind of hints to me that a Bitcoin pump is loading, just like an OBV breakout would suggest. Again, I say one last time, do you think this would upset more people than this? I personally do. I personally think the path of most pain here is up, as there are too many people sat there thinking, the thing's bearish, it has to break down, and I can't wait to load my bags at 12K. So it's going to be a very interesting week. Of course, everything I've said kind of hinges on seeing a lower CPI print, but I've done this plenty of times before. I've done this plenty of times on this channel where I've showed you the charts, and the charts will tell us the news. The news that is being suggested by the charts is that we are going to see a lower CPI print that is going to set up the pause, and things are going to get very bullish very quickly. Again, being bullish pretty much for the last 2 years now has been a very contrarian trade. Most people have been bearish the entire way up. Most people have been bearish all the way since the lows. Most people have missed out on a fantastic yearly performance for the stock market. Most people missed out on that 100% Bitcoin pump as well, remember. And if Bitcoin was to pump 100% from here, I believe the majority of market participants would miss out on that pump as well. So of course, everything I've said could be completely invalidated if we see a hot CPI print, but that is not what the charts or the CME probabilities for the rate pause are telling us. So as ever, we head into next week with a flexible, unbiased and open mind, ready for all outcomes. Currently pushing all of my trades, as you can see. All of the ones I have open, I'm going to continue to push, and we'll see what the market can give. There's nothing else I can do as a trader apart from stay unemotional, unbiased, and see what the market will give. Message to the members: the first stock that I flagged on a breakout looks absolutely fantastic and continues to roar. So we're long, we're strong, we continue to push. And of course, some of those stocks were crypto related stocks. So of course they are conducive to seeing Bitcoin pump. As of yet, no loss because we haven't taken those positions. But if Bitcoin can get bullish, you best believe they are going to be breaking out too. So hang in there. Let's keep pushing the longs, and we'll see what the market can give as always. I'm your boy Camel. Have a great rest of your weekend. And until next time, take care from me. All the best. Cheers. Bye.